Good morning, my Teaser King family. How's everybody today? So I'm going to explain a few things watching. Just 1 second. So I'm trying to get hold of Daria, but I don't think she can text me. All right. So I was watching Mark McGuire and Alligator again because we watched it it was on Friday, but I wanted to review it and clean up a few things that Alistair keeps getting wrong. Okay. So he keeps getting, okay, the US dollar is money, right? This is money. He says it's debt. It is money. Money is a medium of exchange. And in Say's law, we get paid in money and we spend money. Money is a means to an end. This is money. He keeps calling it debt. He doesn't understand it. But this is where the idiot problems come in. An idiot would listen to Alligator, Alistair McLeod, and he would say, well, money, the US dollar is not money, it's credit. And then he would say, oh, well, it's not money, it's credit. And unfortunately, that's incorrect. I've got here over here. Where is it? So that is incorrect. It is money. What is debt? That's something you borrow. So if I buy a house, I go into debt because I take a loan from the bank. The loan's my debt, but they're giving me money to pay for the house, or they're paying the builder, right? So if you take a home equity loan, give me 20 grand, I want to fix the basement. Well, that 20 grand would be debt because you would owe it back to the bank. But they're giving you money, and money, the point of money is it's the medium of exchange it's used to spend. You go to the grocery store, you're not taking credit to buy tuna fish, you're taking money to buy tuna fish. It's the medium of, it's like I need $4 to buy the can of tuna, and you're giving them the $4. That's money. That's what money is, right? It's the medium of exchange used to buy and sell goods and services. It's the medium. It's what's used to purchase and get paid. So when I get paid on Teaser King for my picks, I'm getting money for that. And when I go and give Daria money for rent or food, I'm giving her money, and then she uses it to spend on rent or food or whatever it is. So I don't know why he doesn't get that. That's a very simple Austrian economist. He says, oh, yeah, even Austrian economists don't know that the dollar is not money, it's credit. No, it is money. You don't get it. See, I'll fight back if I know I'm right, and which in this case I know I'm right. You know, I took the master's class, he didn't. So I don't know where he's getting this, that money is debt or credit, and it's not money. It is money. And this is money also, as is gold. They are all money. So this is money and this is money. They're both money. And what the concept is this is being depleted. This is losing its value. It takes more of these to go to the grocery store, and this is gaining in value. The other thing he doesn't quite get, he keeps saying, well, it's money going down, not gold going up, which you hear me argue all the time. This is going up. The demand pushes the price and the value up. You cannot say the value of silver was $25 is now 85 is not going up. It's not worth more. How can you say that? Well, it's the dollar going down. Well, okay, but when it went down to 70, was the dollar going up? No. So you really, he kind of gets part of it, but he doesn't understand. Gold and silver are going up. What he gets confused on is the ounce of gold and silver, right? It's still an ounce of gold. It's still an ounce of silver. So therefore, the quantity of the gold and silver has stayed the same, but the value of the gold and silver has gone up a lot. And you can't say it's because I can go. The steak is let's say I get a steak for $15. So it takes more dollars to buy the steak, but it's backed off. If I could pay in silver, it went from 25 to 85. So that's more surpassed than the dollar. The dollar's worthless. It's lost. We'll give them 99%, but I'm going to say 100%. It's lost its value. So therefore, how can the dollar keep going down, yet the gold and silver price keep going up? So when gold hits 8,000, the dollar is not going to go down another $3,000 in value. It can't. It's already gone. So he doesn't make a lot of sense, but he thinks he does. And this is the typical idiot synopsis where the guy hears Mark McGuire or hears Alistair say, the dollar's credit, it's not money. And then people repeat that. The dollar's not money, it's credit. No, they're wrong. The dollar is money. But because you hear Alistair say it, you then think, yeah, because I don't really understand. And he doesn't really understand. But because he says that money is really not dollars, the dollar isn't really money, it's credit, he's wrong. The dollar is very much money. And, again, if I have $100, who do I owe it to? I don't owe it to anybody. If I go take a credit card and I put $100 on it, I owe the bank the 100, but the money itself, I don't owe anybody. How is it credit to whom? Now, maybe it's credit to the bank, and maybe he's talking in a different language where you owe the Federal Reserve the $100 if they borrowed it. Well, that's a whole different atmosphere. The medium of exchange that's most common is the dollar, is the euro. This is money. It might be credit to the central bank from the banks. We're not talking about that. We're just talking general. If I have this, it's money. I can go use it to buy goods and services in Europe or anybody that takes the euro. And I can, $5 won't buy me anything, but basically that's what it is. This is basically wallpaper. How this is absolutely worth nothing. So he misses the whole point. I like how he likes to take a stab at Austrian economists who don't understand it, which is bullshit. A real Austrian economist understands exactly that. That's money, and gold and silver are money. And we understand. But a real economist understands if there's demand for something, the price goes up. The mantle card, the price goes up because of demand, not because the dollar's worth less. Same thing with gold and silver. It's up because of the BRICS demand, not necessarily the dollar's going down. Like I said, in the mantle cards, it went up. It's been going up for years. So I'm not quite sure what. So the dollar goes down. So any asset is only going up because the dollar goes down. No, assets are, they go up and down based on the demand for the item. It's an auction. So if there's a high demand for the Mantle rookie card or a Tom Brady card or a Michael Jordan card, if the demand goes up, the price goes up because of the demand. And when the price drops, it's because there is no demand. So it's a very simple economic thing. So for somebody who's a stockbroker, banker, whatever he is, he's totally outclassed here. He totally does not understand. Anyway, I like to clear that up because like every time I watch him, he keeps saying the same bullshit. And if he keeps saying the same bullshit, he's going to start believing, and you're going to start believing that the dollar is not money, but it's credit. It's money. Money is what's used. So he doesn't understand the definition of money. Money is what's used to purchase gold, and it's used to purchase items, right? It says law. I go make money. When you get paid, what are you getting paid in credit? I mean, it makes no sense. You get paid, $5,000 in the month, and then that's what you use to buy things. But that's what money is. It's the medium of exchange. All right, I want to show you quickly this 28% capital gains tax when you sell gold. A 28% capital gains tax is a maximum federal long-term rate applied to specific, often higher risk or non-traditional investments held for more than 1 year, rather than the standard 15 or 20% rates. This primary targets collectibles and art, coins, stamps, and qualified small business stock. Key aspects: applicable assets, collectibles including art, antique, coins, stamps, precious metals, and rare items are taxed at a maximum rate of 28%. So you think, oh, I got to pay 28%. It also applies to the taxable portion of gains from section whatever small business stock. Well, we don't care about that. Hold time must be more than a year. Income thresholds. Now, here's what they are not. They're hiding from you. If your ordinary income tax rate is lower than 28%, which I will show you, you will pay your lower ordinary income rate on these gains rather than the 28% rate. So right here, income thresholds. If your ordinary income is less than the 28%, you will pay your lower ordinary income rate on these gains rather than the 20. So they keep scaring you into thinking, oh, if I sell my gold, I got to pay 28%, which couldn't be further from the truth. You would not pay it. You would pay your ordinary income rate. So I showed you that yesterday. Let's go into that. So here's your rates. Long-term capital rate: assets held for more than a year are taxed at 0, 15, or 20, depending on taxable income and filing status. So if you make basically 49,450, basically 50,000 in your single, you have a 0% rate. That's what you're going to pay on the gold, not the 28%. You're going to pay your standard rate. 50% on up to 545,000 single, 613,700 married. So you're making 500,000, you're only paying 15% on it. And then above 545 or 613,700, you're paying 20%. So nowhere in here are you paying 28%. So what is this? What are they talking about? These are taxed at 28%. If your income tax rate is lower than 28%, you will pay your lower ordinary income rate on these gains rather than the 28%. So how confusing is this? You think, oh, gold, I got to pay 28%. And you don't. I just showed you. If you're under 50 grand, you're not paying any tax. If you're up to 545,000, you're paying 15%. So I think what they're saying is you could pay 28% if it's coins or stamps or jewelry, whatever. what are they calling it? Um, Collectibles, art, antiques, coins, stamps, precious metals, and rare items. So basically, what they're doing is saying, well, if you're not in the stock market or a real estate trust or not in an annuity, if you're not in the banking sector, we're going to charge you 28%. However, it's if your ordinary income tax is lower, you will pay your lower ordinary income tax. You're not going to pay 28%. Totally confusing, but you have to, again, do what I do, which is deep dive. So the first thought is, shit, I owe 28%. But then you read it and you go, well, I make 50,000 because I'm retired. Oh, it's zero. So I don't pay 28%. Very, very misleading. And this is why you have me to sort this out for you. So your tax rate, where it could be 20, it never really comes into 28%, because if you make more than 545, if you're single, or 615, it's 20%. So it's never 28%. If your ordinary income tax rate is lower than 28%, you will pay your lower ordinary income tax on these gains rather than the 28% rate. So there is no 28% rate, because if you make more than over 545 single, 615 married, it's 20%. So at what point do you pay 28%? Never, really. It's never. Examples of assets taxed at 28%, which we know: precious gold and silver, comic books, artwork, and collectibles, which would be baseball cards, rare coins, stamps, and antiques. So does that make any sense? You're going to pay 28% unless it's your income thresholds, which are 0, 15, and 20. It's about as clear as mud. So what is this 28%? Because if it's based on, if your ordinary income tax rate is lower than 28%, you will pay your lower ordinary income rate on these gains. And there is no 28% rate. What are they talking about? So here it's 0%, it's 15, it's 20. Where is 28? Very confusing. Assets held for more than 1 year are taxed at 0, 15, or 20, depending on taxable income and filing status. So I don't really see where this 28% comes in unless you use that, but it's not saying that. It's saying if your tax rate, you'll pay less than 28 if based on these scenarios. So when would you pay 28? Or there's, if you sell gold, it's 28, and then you ignore these limits, but they just said that's not what they said. Income key aspects of the 28% capital gains rate. So it's right there, black and white. Key aspects of that. We know what the asset is at a maximum rate of 28%. It also applies to the taxable portion of gains for small stock. And then it says but here's your threshold. If your income tax rate is lower than 28, you will pay your lower ordinary income rate on these gains. So if you make 50 grand, it's 0. So where are we getting 28%? Or what am I not seeing? If your ordinary income tax rate is lower than 28, which it looks like it would be, you will pay your lower ordinary income tax rate on these gains rather than the 28% rate. So as far as I can see, you make 50 grand or less, you're paying zero. You make up to 545,000 single, 615 married, you're only paying 15%, not the 28. So I don't see any scenario you're paying 28%, but it looks like they're trying to scare you. I don't really get that because it's going by your ordinary income tax rate is lower, you will pay your lower ordinary tax. So I don't know where they're getting the 28, but it seems like you would pay zero. If you make 50 grand, you're going to pay zero. So you make 500,000, you're going to pay 15%, not the 28. So again, it's very confusing. It's a capital gains tax is a maximum federal long-term rate applied to specific, often higher risk or non-traditional investments held for more than one way, rather than the standard 15 or 20% rates. The rate primarily targets collectibles. So now it says, well, rather than the standard 15 or 20% rates, but then it says income thresholds. If your ordinary income rate is lower, then you're going to pay lower. Well, that's involved in the 28%. So this whole thing doesn't make sense. Let's look at irs.gov. All right. So they have to be long term. If you have a net capital gain, a lower tax rate may apply to the gain rather than the tax rate that applies to your ordinary income. You have a lower tax rate that applies to your ordinary income. Then it says capital gains tax rate. Capital gain rate of 0 applies if your taxable income is less than or equal to 48,350. A rate of 15% is more than 48 and equal to 533,400 if you're single. Or 600,000 if you're married. However, a capital gains rate of 20% applies to the extent that your taxable income exceeds the threshold set for 15%. There are a few exceptions where capital gains may be taxed at rates greater than 20. The taxable part of a gain from selling Section 12, which is small business stock, is taxed at 28. Net capital gains from selling collectibles are taxed at a maximum rate of 28%. So again, it's confusing. Do I pay am I paying the regular capital gains 0 for 50,000 or am I paying the 28? There are a few exceptions where capital gains may be taxed at rates greater than 20, but it doesn't say 15. So I think it's just when this looks like if you're making over, if you make more than 566, 700, if you're married, so if you're making more than 500 and 15% more, 300. So if you make more than 600,050 as married or 533,400 as single, The capital gains rate of 20% applies to the extent that your taxable income exceeds the threshold set for the 15% capital gain. There are a few exceptions, other exemptions where capital gains may be taxed at rates higher than the 20%. So now I believe this is just where you're making like $1 million, because this is not applying, this is saying where you'll pay more than the 20%. So if you're making zero, if you're making 50,000, it's zero, it's zero. If you're making up to 500,000, it's 15. It doesn't give you this. It only gives you this capital gains rate of 20% applies to the extent your taxable income exceeds the threshold set for the 15% capital gains tax. So only if you're making over 566, well, if you're making more than, if you're married and you make more than 600,000, or you're single making more than 533, then I believe you pay the 28%. Right? So you're a millionaire, you're going to pay 28%. But it only says the 20%. There are only a few exceptions where capital gains may be taxed at rates greater than 20%. But it doesn't say the 0 or the 15. So I think if you make under 500,000, you're paying 15%. This 28% is only if you're making over 600,000 married or 533 single. Instead of paying 20%, you'll pay 28. The taxable part of a gain from selling section, small business, tax at 28. Net capital gains is 28. So again, it's not on, it's only if you're making more than 544. So it's very, it's very convoluted and confusing. So you think, well, I'm retired, I got gold, I sell the gold, I got to pay 28%. No, I don't pay anything. You make 200,000. You think I got to pay 28%. No, you're paying 15% capital gains. And again, if you get a 1099. If you don't get a 1099, I don't think you're going to pay it. And I don't see how, the government gets all this data. So if they don't have, well, he doesn't have a 1099, what are they going to go look at? Well, I know he didn't get a 1099, but let's go look at it anyway. Like I say, if I go and my jewelry store gives me a check and I go to the bank, are they going to ask what's the check for? I don't know. It's just going to say jewelry store. I sold my wedding ring. Is that a collectible? I don't know, but that still, they're going to look at 1099s more. They're going to look at you putting money in the bank if the bank asks you for it. So I don't know. Let me know if anybody has that, if they can bring it to the class and say, hey, yeah, I sold 5 ounces of gold and the guy didn't give me a 1099. He gave me a check. You prefer money, but he gave me a check. And with the check, I got, the bank asked me what it was for, and it's a jewelry store, or maybe it's a pawnbroker. And I had to say it was that. Maybe you go to a pawnbroker and he just says pawnbroker, and you say, well, I sold, whatever. I sold something worthwhile, and then they can, are they really going to transaction you make in the bank? I would suppose if you sold a lot of gold and it was 200,000 and you brought it to the bank in a check and they asked you, but you'd have to be a total idiot to do that. If you're going to, first of all, you shouldn't be selling that much gold. And if you are, you should do a little at a time. 5 ounces here and 5 ounces there, and keep it small and do it over the course of a few months, but not take them all in at once. And then the 200,000-300,000 would stick out. And when gold becomes higher in value, it's 50,000 an ounce, then we'll sell an ounce at a time, but I don't see a need to sell more than an ounce. Again, we're not buying gold and silver uh, to make money. This is a sort of like insurance. This is to keep the value. So if you're a millionaire, you take your money out of stocks, out of the bank, out of dollars, you buy gold and silver, and you store it in a safe play away from the banking system. And then you have your million. As your million goes to zero in dollars, it goes to 10 million in gold. And but that's not the intent to sell it, because then you're back in on the Titanic. You're back in dollars, which then you don't want to be back in dollars. So you never want to be back dollars because it's losing value. It's being inflated. We'll talk about inflation. So it's a lot of these things I was watching on Mark McGwire with Alligator and going, Alligator just doesn't get it. And he insults me by Austrian economists think that the USD is money when it's credit. And it's like, no, it is money. You don't understand Say's law, and you don't understand money is the medium of exchange. So no, you're the one who doesn't get it. Don't insult me, because your lack of education and your ignorance is telling you another story. So basically, from what I can read, the only time you pay 28% is if you're in the 20% bracket, and instead of paying 20%, you pay 28. So if you make 300,000, you're paying 15%, which is still a big chunk, and still something you don't want to pay. So again, I would only sell a few ounces, and I would not get a 1099. And as far as I'm concerned, I don't know what you're talking about. You know, same thing if I sold my Mantle card for 70, 80,000. Depends on, now, if I sell it on eBay, which I probably would have to, then I would get a 1099, and then I'd have to report it. But because I don't make any money, because I'm on Social Security and I'm retired, then I would pay zero on it anyway. I'll test it when I do my tax return. It'll say any, investment, any income, what's this called? Any capital gains, and I'll put it in, and then I'll take it out. I'll say, yeah, I had a capital gain for $50,000. And let's see, and then it'll look at my rate and it'll say, oh, you owe zero on it. Or it might say you owe 28%. Now, I won't keep it on there because I didn't sell anything, but I am curious how they're going to tax it. But the way I'm reading it, and this is the IRS.gov, it's, if you make 50 grand, there's zero tax. If you make 500 grand, there's 15%. And then if you make over that, then it's going to do 28% on you. So we'll see. Maybe if you do a tax return, play around with it. Put it in, even though you didn't sell anything, just see how it taxes it. But my guess, if you make 100, 200 grand, it's going to be 15%. And, 15% on 100 grand is 15,000. So, we're trying to sell an ounce or two. That's it. All right. So that is your capital gains tax rate. Money, we've talked about. Money, this is money, this is money, and this is money, as is gold. All three of these things are money. Now, I don't know where this is credit when it's actually money. Medium of exchange used to buy goods and services, also used to get paid for your skill set. They're not paying you in credit, and this is not credit. Who do I owe with it? I have $100. I don't owe anybody with it. So, and then we all know this and gold are money. So we know these are money, but this is money. Now, this is inflated, which, again, let's talk inflation versus it's not whatchamacallit, it's not debased, it's inflated. Inflation, debasement is taking the silver out of the silver coin. That's what debasement is. And that's all it is. It's taking the gold and the silver out of the gold and silver. There is no debasement here because there's no gold and silver in it. You're not losing the value of the dollar. The dollar has no value if it's not backed by gold. So you're not debasing this. You're inflating it. You're printing it, and the value is going to zero. So inflation. Let's see. I think I have some. I think I have inflation definition. So this is master's level. Increase in the money supply is the cause. Decrease in purchasing power is the effect, meaning the $100 doesn't buy what it used to, which we can see at the grocery store. Cauliflower, $3.99 for a head of cauliflower, should be 50 cents. Increase in the general price level is another effect. So prices will go up because it takes more dollars to buy it. But that's what inflation is. It's a increase in the money supply. It can't be any easier than that. So the money supply gets increased, the decrease is in the purchasing power. So you print, this is worth less. And then prices will go up because it's asking, I need $10, but now the $10 was worth $10 is now worth $5. So I'm going to need $10. I'm still going to need the $10, but since your dollar only is worth $5, I'm going to need more of your money to get back to my $10 because the $10 you're going to give me is worth $5. So I really need $20 to buy the goods and service. Now that's kind of what Alligator and Mark McGuire are talking about. The dollars going down, not gold going up. They're assuming gold sits there at $1,000 and now you need $2,000 to buy the same ounce. And my argument is, well, it's also an asset and it's also going up in value. It might have been 1,000 and you need 2,000 for it now, but wait a minute, it's not worth the 2,000 anymore. Now it's worth 5,000. And that's the point they're missing is they think it's still worth $1,000 or they think it's still worth $35. The value was 35, which was fictitious, but now it's still 35. But now it takes 5,000 to buy the $35 gold coin versus that. That's what their argument is. And my argument is, how are we getting to the 5,000? Right? So yes, we know it takes more dollars because the dollars have lost value, but you can't tell me how did we arrive at the 5,000? The money lost its value and now it needs 5,000 without the gold going up from 35 to 1,000 to 2,000 to 4,000 to 5,000. That it's the dollar keeps losing, so we now need $5,000 to buy the gold. No, they don't get it. Yes, it used to cost 35, and now it costs 5,000. So the dollars lost value, and we need more dollars to buy the gold valued at 5,000. However, how are we arriving at the 5,000 is my point that they're not understanding. It's not that the dollar's lost so much value that it now needs 5,000. It's also that the gold has gone up in value because BRICS and everybody else is buying the gold, pushing the price up. So how do you arrive at the price equaling 4,000 or 5,000? We had 5,500 and it went back to 4,700. How did that happen? If the dollar is not worth is worth a lot, it takes more dollars to buy it. How did we determine 5,500 versus 4,700, and now we're at 5,100? How are you determining how much dollars you have to use to buy the gold? And that is my argument. It's the BRICS demanding the gold, pushing the price up. So you need more dollars to buy it than 4,000. You now need $5,100 to buy the gold. And that's my argument is, yes, I know the value of the dollar dropped because you printed it and it takes more dollars to buy it, but how are you arriving at the end price? And this is what these guys just don't can't comprehend because they're idiots. They hear things, but they don't understand it. And I don't mean insulting idiots. I just mean that's what an idiot is. It's somebody who listens. I'll listen to Ray Dalio. I'll listen to Peter Schiff. I'll listen to Andy Scheckman. And they say the sky is blue. And I go, oh, the sky's blue because they said it. But I don't really understand why the sky is blue. So they don't understand that the market is pushing the price of gold and silver up. It's not that the dollar is going down in value. Now, yes, the dollar is going down in value, but if the gold price is 5,000, why is the silver price 75? Your conclusion makes no sense. Silver should be 2,000 an ounce if gold's 5,000 an ounce, but it's not because it's being suppressed. So that's my argument there. It is not necessarily the dollar being worth less, but I understand where you're coming from, where it took $35 to buy the ounce of gold. Now it takes $5,100 to buy the ounce of gold. But my argument is, how are you arriving at the 5,100? And that's because the demand for gold is going up. And the demand for silver will make it go up. And that's how we arrive at these high prices, is because the dollar is inflated, which means an increase in the money supply, which we argue every month. It's because you got to pay interest on the $39 trillion debt. You got to pay all the government employees, plus the ones that are retired, their pensions. You have to pay Social Security, Medicare, and Medicaid. And you got to pay the defense contractors. And you don't have enough money to do it. So you have to constantly print money to pay all these people. And you can't. And then you try doing treasuries to China and Russia and India and all these countries, Germany, France, but they don't want the debt anymore. They don't want their bonds in US dollars because they realize you're printing the US dollars to zero. It's the money, the decrease in the purchasing power. I don't want my money in treasuries. I don't want my money in USD because you keep printing it and it's losing purchasing power. It loses value, basically. Purchasing power is value. So if it loses value, why do I want to have $1 million in treasuries that are slowly going to be worth about $10? So they're getting out of it. That's why the stock market will crash. And then it leads to everything being more expensive. And then I won't be able to afford everything. So now, because the dollar will collapse, the value of the house, the value of your car goes to zero. That's what happens because all of a sudden the dollar isn't worth anything because you increase the money supply and you decrease the purchasing power. That is the Austrian economic definition of inflation. Now, increase in general price level is just because it needs more dollars. So the tuna was selling for $1 for a can, and now the dollar's lost value. So now we want $4 for the can of tuna. Not because the price necessarily went up, but the value of the dollar went down. So we're going to ask, we still want to get $1. But now because the dollar's value lost, we now need $4 to get the dollar for the can of tuna or the Pepsi or the Oreo cookie, whatever. So they're raising prices to still get the same amount they need in dollars. And so that's what inflation is in the basic terms. Money printing also. You increase the supply. It is not debasement. Debasement is taking the gold and silver out of the gold and silver, like that's what the Romans did. That's the only time you've had debasement, is when the Romans took their gold and silver out of their gold and silver coins, made it worthless because now the gold had a value, but not the copper. And the silver had a value, but not nickel or not tin or whatever the fuck they put in it. So as you took the metal that had the value out, it made the coins worthless. That is debasement. Everything else is inflation. It's the money being printed, losing its purchasing power or value. And so therefore, when you go to the McDonald's, they want $10 for a burger. They really don't. They still want the dollar, but the dollar, it now takes $10 to buy the hamburger where it took 50 cents in the 70s. But that's why you compare it to the 70s when we went off the gold standard. So 1971, gold was 35 an ounce. It's now 5,100. Most of it is the inflation, but again, because BRICS came along and bought the shit out of it, now the price is, it's 5,100. Why does the price go up? The price goes up because it's being bid up, because that's how prices work. If, like I say, if I have one bottle of Canadian Club 12 and I got 10 people that want to buy it, it's the price is going up because they're going to bid on it. I want it. No, I want it. No, I want it. And it's the only one you could get. That's why you see a Joe Montana rookie card, PSA 10, worth 110,000, because there's not a lot of Joe Montana PSA 10s out there, but there's a lot more demand. And that's what's happening with gold and silver. There's not a lot of gold and silver, but the demand's huge. Now, as people realize this and this are increasing in the money supply and the decrease in the purchasing power. So as people realize the purchasing power has gone down. So as they start to see it, the dollar isn't worth anything. I can't buy anything with it. I can't buy anything with a €5. I need $5 for a Coca-Cola. I need $20 for a euro Coca-Cola. As they start realizing that the prices are going up, and once they start realizing that, wait a minute, it's the dollar being devalued, losing its purchasing power, losing its value. Once they start understanding it's the dollar losing value, not Coke raising their price and McDonald's raising their price and Oreo cookies raising their price. Everybody's raising their price. It's not that, it's the dollar being devalued. And once people realize that, you got 100 grand in the bank, you got to get it out. You got money in your stocks, you got to get them out. You've got to get into the safe haven, which is gold and silver. Now they're scaring you with this 28% capital gains tax so you don't go into it. But that's only for people in the 20% bracket. It's not for people who are retired and don't make anything except Social Security, or people who make 500,000 a year are only going to pay 15%. So they're trying to decide, well, I better stay in stock. Well, you're going to pay capital gains in stock, but it'll be ordinary. So you're still going to pay 15%. Let's say you make 500,000 a year, 400,000 a year, because our salaries are not going up. As the dollar devalues, the salaries aren't going up the same as the goods and services. So Pop-Tarts go to, $5 a box, but wait, your salary isn't going up, and consumer it with the inflation. And so as that's happening, people have less and less money because the food's getting more expensive, because they keep raising the price because the dollar's being inflated. And that's why you run into gold and silver. And that's why you run out of stocks and bonds and real estate trusts, and get out of the bank, because all of the money there is worth less and less and less. And as the foreigners who have 20, 30, 40 trillion dollars in our stock market and in our markets pull it, because they realize, I don't want to be in US dollars, and they get out of it. And so they sell, it's all selling, right? Which is what you saw with silver. There was a big short. And so it sold. And once that happened, once it's sold, what happened? The value of the silver dropped, because there was no buying, it was all selling. And that's what you're going to get in the stock market. Plus the companies aren't going to make as much because we can't buy as much. Now I did something on AI, which people, again, I'm looking fifth dimensionally 5 steps ahead. If we got rid of all the people to work, and well, let's just take Caesar's Palace. You want to go AI. You don't want to have dealers. You don't want to have stickmen. You want to have computerized craps and computerized blackjack and computerized, well, poker. You can't. You got to deal the cards. And sports betting, you can't. You got to, you can have AI make the bets, but at the end of the day, it's immaterial. But let's say dealers and cocktail waitresses, and you get rid of that, and you just Oh, go get your own beer or go get your own drink and you got to pay for it. It's sort of like a vending machine, right? Um, they're You're not going to pay them, right? You don't pay AI, you don't pay robots, computers, but then they don't have money to buy your goods and services. So where you're counting on all the waitresses and all the dealers at Caesars to then go buy food and pay for their parking and go shopping and buy a Caesars t-shirt and mug and everything. So where you're counting on the people who you're going to pay to then say's law go spend it on food and clothing and stuff, you're just going to have AI people. And AI you don't pay. AI doesn't go shopping. What happens to your economy? It goes down the toilet. Because if you don't pay people, you don't have people shopping. So I'm not going to pay AI, they're not going to shop. You've just killed your economy. And if you do that all over, then the economy will not exist because there's no buyers. So these guys think they're so smart. Oh, look at all the cost I'll save. Yeah, but you're going to lose sales. Who's going to shop there? Nobody will have money to shop there. And if nobody has money to shop, I'm saving the money on one end, but my sales are going down on the other end. Plus, if something screwy happens, I don't have any people there to do anything. Customer questions, I don't have any people to do it. I know I called up a hotel when I went up north and I said, I just want to confirm I've been up there before. The pool was under construction. Is the pool working? They couldn't answer the question. And so they ended up, I had to call back and talk to a real person and say, is your pool working? Oh, yeah, the pool is working. Okay, fine, thank you. Otherwise, I wasn't going to stay there. But the AI couldn't answer that question. And so you're going to run into that also. But again, if you're not paying the people, you've also killed your own customers, because the people who work there, I'm sure, are eating there, but now they're not going to eat there because they're a bunch of fucking computers that don't eat. John Z, happy Ramadan, TK. Well, happy Sunday, John C. So that's what inflation is. So we've talked money and we've talked capital gains tax. Okay. Because again, they try to scare you into staying out of gold and silver and paintings and into the stock market and the banks and annuities where they control you, and then they get all 1099s from you and stock purchases, and the banks then here's your interest, here's a 1099. So you're in the system. So they want to keep you in the system. Gold and silver keep you out of the system, as does a Picasso, as does this Van Gogh. Now this isn't real, but if it was, I'd be out of the system. So we'll see what happens with gold. Like I said, we'll see if they give you cash or a check. You want cash for your gold, and nobody knows shit. However, if you have to take a check, just have it made out to cash or whatever, and then get the cash for it. So if I sold an ounce for 5,100. I would say, give me the cash. If he said, well, I got to give you a check, make it out to cash. And then when I go to the bank to cash it, I'm going to say, I want the cash for it. Well, I might have to wait a few days. Okay. But I want the 5,100 in cash. I don't want to leave it in the bank. I don't want to leave a trail. So when I bought my gold and silver, I used cash. There's no trail. Nobody knows I have it. Once in a while, I use my credit card. When I was going to Alabama, I thought I was going to get reimbursed. They fucked me over there. They taxed me and didn't give me the full amount. I was expecting 10 grand. I got 7 because they took taxes out of it. All right. Investing. What is an investment? It's you're taking your extra money after you got paid for work or inheritance or whatever you do. And then you take your bills, and then whatever's left, you you can invest. You can buy golf clubs. You can go on a vacation. You go get obviously food and you could go out to a nice meal, or you can invest. And an investment is strictly, as we looked at capital gains, it's antiques, it's art, it's gold and silver, it's a stock, it's a bond. You're doing things to make money, or in our case with gold and silver, you're actually doing it for insurance to not lose money. So it's the same thing. You're playing poker and you fold the hand, it's good. You didn't make money, but you didn't lose money. That guy bets $100 at me, and I'm like, I'm going to fold. Well, I didn't lose the 100 because he had me beat. Now, I didn't gain money. I didn't make money, but I wasn't in the opportunity to make money. I was strictly in an opportunity to not lose money. And so that's what we're doing with gold and silver. We have 100,000 in dollars. We then trade it for gold and silver. So we won't lose the 100,000 will not go to zero. It will go to zero, but we'll be out of it. So instead of losing 100,000 when the dollar crashes, we'll be in gold and silver watching it go to 200,000 or 500,000. And so people ask me, do I see gold going to 100,000? No, I don't, because I think the dollar will collapse before it goes to 100,000, and therefore the dollar will go to zero, and the gold will be worth 100,000, but not. There won't be dollars to price it. It'll just buy a house worth 100,000. So the gold will become the money. And so investments are ways to make money outside of working, outside of being an accountant or an IT person or a payables clerk or working at the Farmer Jack's or selling shoes with Al Bundy or any of those jobs, a baker, a butcher, a candlestick maker. You won't have, that's where you make money, right? At work. But the extra money is the investment. So you're trying to make money with your money, playing poker, betting football. Those are all investments. You have to be very sharp in a thorough understanding of it to make money. Poker is very difficult, especially Hold'em. Hold'em's such a bullshit game. You get two cards, there's five in the flop, and you try to you don't know what the two guys are. Sometimes they give you away when they go, oh shit, I didn't make my flush, but that might not be real. They might be doing that and hit the flush or have a full house. Damn, I didn't hit my flush, but I did have four kings. So you really never know the opponent's two cards. You looked weak. That's what I hear a lot watching high stakes poker with Doyle Brunson and all those guys, Johnny Chan. He looked weak. He looked weak. Bullshit. I can look weak and not be weak. I mean, that's that. TK, I bench press 225 pounds. Is that good? I have no idea. I don't use weights. I do in the pool. I kind of do an exercise where I curl water, and it does give me some muscle, but I don't know I can't tell you it's good or bad or ugly. I'm not a coach. I'm not a trainer. And the key is you got to eat healthy, cut the sugar out, cut the alcohol out, the pop, the juice, cut your sugars, cut your high fructose corn syrup, do some fasting. And then you look at yourself. And if you look good and you're happy with your body, that's all that matters. As far as 225, 250, 300, it's up to you and what your body does. And it sounds good, but I can't answer that question. But how many times do you bench press 225? 10 times, 20 times, 5 times? Just be comfortable at it. I mean, I'm in the pool for 40 minutes. Is that good? I don't know. I'm running and I'm swimming. So quick story from yesterday. And then we'll get back into pretty much we covered investing, but we'll get a little more into it. So I'm at the pool yesterday and they closed it for this tournament, right? And the tournament started Friday at 2 and going all weekend. It'll go till tonight. I get there at about 3 o'clock yesterday and there's nobody in the pool. There's nobody in where the tournament is. The lights are off. There's nobody there. So I go to the lifeguard. Can I go in it? Well, no, it's closed. But there's nobody in the pool. Why is it closed? And I don't know if it's a cleaning issue or what, but they're basically saying it's closed. We can't open it. Then they made a comment, well, there's no lifeguards. Call them in. You got 1,000 lifeguards here. I see 20 lifeguards every time. If I come about 4 o'clock, they change lifeguards. So there's 7 or 8 in, and they bring in 7 or 8 new ones. And it says just call a couple in or put them on call saying, hey, if the thing ends early, I'm going to call you in and bring in 2 or 3 lifeguards. And so that doesn't make sense. Well, they paid for the pool for the weekend. I paid for the pool also. I pay a monthly fee to use the facility, which includes the pool. So I'm paying just like they're paying, I'm paying. So their payment supersedes my payment. So the person who manages the pool had already left at 3 o'clock when the tournament ended for Saturday. And I'm irate going, I want to use the pool. I need it for my back. I want to do my 40 minutes of workout. I really don't like to miss. And the other pool's like 3 feet deep. And you really can't, it's just too shallow. It ends up hurting my back if I run in it. There's this little section of about 3'6", about this deep, about this wide in the end of the pool, but the kids are always jumping off. And so you can run in place for 5 or 10 minutes, but it's not the same. I like to think when I'm in the pool doing my 40 minutes, I'm doing a big lap and then coming back. And it probably takes me a minute to do the lap. And I'm thinking about gold and silver, and I'm thinking football, and I'm thinking the girls, and I'm thinking this, and I'm thinking that. And it's a nice little wander away. And I'm sitting there running and I can't think of anything. It's very loud with the kids yesterday. But what pissed me off is there's nobody there. So it's like closing an area in the restaurant and I want to sit there. Well, no, it's closed. Well, there's nobody there. What do you mean it's closed? So I'm arguing with this supervisor and they can't answer and it's been closed and I'm getting very frustrated. I go, but there's nobody there. It's dark. Just open it up, bring in a lifeguard. I don't get, okay, explain why you can't open it with a serious explanation. And again, keep in mind, I do pay, I am a customer, I pay a membership and I would like to use the pool and the tournament is over right now until today. It makes no sense. So I was very frustrated. Plus, I don't like all the noise and the little kitty. It's the 3.5 foot pool with the little wave pool, or not a wave pool, but the what do you call it? You run in a circle and there's current, and then there's a slide. So I went into the hot tub, but it was like really ridiculous that the pool's sitting there open, but I can't use it. See, I can't comprehend that. I can't think like that. I see it open. Nobody's in it. Open it up. Why is it closed? There's nobody there. The tournament's over. So that was my argument with them yesterday, which I got nowhere with. They weren't going to open it because the head of the swimming wasn't there. And I could talk to her. I'm not going to talk to her today. She'll be busy. I can talk to her tomorrow, but there's no point. She'll just, what's she going to say? And it's past the point. So I'm not going to bring it up again, but it's very stupid. Now, I don't see any more of these tournaments. You had a tournament a week in January, and you had a couple tournaments. Like I said, Tuesday, they closed at 3 for another tournament, a high school tournament. And this is some big thing where it's closed all weekend. Now, I did go early, as I told you, to do my laps because I knew I wasn't going to do my laps Saturday and Sunday. But, it's fine if I go and they're having the tournament on. Like if the tournament's going now, I would have no problem. I understand. But not when it's empty. Then I got a problem. And I'm pretty tough about it and pretty stoic about it. Anyway, that's my thing. So investing's a way to make money by using your money, and you have multiple things. There's, like I said, you can invest in gold and silver. You can invest in Picassos and Van Goghs. You can invest in stocks, bonds, real estate trust, land, which I wouldn't recommend. You gotta develop the land, like developing the quarterback that Brady says. So then you're looking at risk and reward. What's the least amount of risk for the most reward, which most people, it would go right over their heads. They would have no idea of measuring the risk and figuring out the reward. Anyway, so that's investing. And basically, the best is gold and silver. It's no risk, and you're going to make a fortune. And then it looks like mostly if you're retired, you're not going to pay any capital gains tax on it. If you're working, making 200,000-300,000, you're paying 15% on it. So it's only the 20% bracket that looks like it's paying the 28%. That's about it. That's how I read it. Oh, it's 28%, but it's based on your income bracket. It's so like, well, is it 28%? Do I have to pay 28% if I'm making under 50,000? No. Okay. So again, I'm retired. It's not like I'm poor. I'm just retired, right? All right. So that's investing, and this is going to leave us with some football talk, and then we will watch Mark McGwire, but not the whole show, just a few sections that I've pointed out. But anyway, the inflation definition: increase in the money supply is the cause. The decrease in purchasing power is the effect, meaning the money isn't worth as much because they printed it. So every month when they pay the interest on the dividend, on the debt, and they pay for all the government employees and the defense contractors, and they don't have enough money, and every month they print it, the value of the dollar drops. This is why when Jim Rickards says, oh, we can print as much as we want, he's out of his fucking mind. You can't do that. It will devalue the money. That's what inflation is. It's printing, it's increasing the money supply or inflating the money supply, where you get the term inflation. It's not that hard, and then Alistair McLeod, it's over his head. Well, whatever this inflation is, it's ruining the money is what it is. You're telling us that it's not even money, that it's credit, which you're out of your fucking mind. The money, this is the money. This is the money. This is money. If it's debt or credit or whatever you want to call it, it's still money. As is this is money. As is gold is money. We get that. There's different types of money, but if you print, just like if you found this big gold supply, that would inflate the price of gold, would go down because now there's all this gold and there's not as much demand. But at this point, we have way too much of this and no demand, and way too little of this and not and huge demand. That's what the inflation is. All right. So gold is the ultimate inflation hedge. Buy gold when there is inflation. And then my little note is there is always inflation if the paper money isn't backed by gold. That's my note in class, May 25th, 1993. There is always inflation if the paper money isn't backed by gold. And as far as I know, since 1971, there is no backing of gold. So if you want to measure inflation, you go back to 1971. And Coke was a dime, and now it's $3. And you want to say inflation is 2%? You're out of your fucking mind. All right, what else? Real quickly on the Federal Reserve. From 1830 to 1861, there was free banking. All banks printed money, promised to pay with gold. That's how it should be. From 1862 to 1913, there was a national banking system. Suspend gold operations. Only national banks can print money. So there's competition. There's 10, 20 banks printing money. And if one inflates, everybody gets away from that and goes to these other banks. And that was until 1913. Then from 1913, the Federal Reserve came in, and then it became a monopoly. Only the Fed can print money, and that's the problem we have now. From 1862 to 1913, the national banking system was backed by gold or government bonds. So the money was backed by gold until 1913. So central bank has a monopoly on printing money. They're the only one. This is the problem. There's no competition. So back in 1862, only national banks, plural, can print money. 10 national banks. They're competing, right? If one inflates, everybody takes their money out and goes to another bank. And so the competition allowed no inflation, and they were backed by gold. So once the central bank comes in and they're the only ones that can print money, they print the shit out of it. What are you going to do? Change money is what you're going to do. Let's see. And that was the start of the second test, was what is inflation? Now the government can print money, but it's mostly the banks that cause the inflation. The bank credit inflation, the most serious, causes the trade cycle. So when the banks give you money for a loan, that's inflation because they're coming up with money out of thin air. And then we get into economic history. Romans 250 BC to 500 AD. It's not 1500 years, it's 750. The feudal system, the medieval, was 500 AD to 1500. So we had 1,000 years of the Dark Ages. The mercantile era, which is socialism, 1500 to 1821. Then the classical liberal, what we want, Adam Smith, 1821 to 1914. And that's when the world boomed. It was under the Adam Smith classical liberal era. Mercantilism is socialism or nationalism. When you hear that, that's socialism. The Nazis, the Russians. Then we had from 1914 to 1965, the era of regulation, intervention. So the government started interfering in the economy, which we know fucks everything up. And then from 1965 to the present, era of entitlement, where the entitlement is now, food stamps, this, we'll give you money for that. And then they start entitling the people who then get trapped, keep getting the money from the government. And I don't think I'm in that with Social Security because I paid into it. So all I'm trying to do is get my money back. If you wouldn't have taken it, I'd have an extra 600,000-700,000 because I could have invested it and taken my employer's 7.65 and my 7.65 for 40 years, and I could have had it in an account that I couldn't touch, and then I would have had 500,000-600,000 if I just made 5% instead of going into a black hole where you take the money and pay for other things, and now I'm getting money from other people, and it's just a Ponzi scheme. And that was it. I don't want to get into the Roman era. We can get into that later. Quickly on the Depression, the Great Depression. The cause of the Depression was business stagflation and unemployment. Well, this is Seinholz. Stock market crashed, interest rate went up, profits dropped. So basically, profits dropped, so the companies weren't worth as much. Government price controls, high tariffs was the big problem, went worldwide. Farming collapsed because we couldn't export. So it all comes back to the Smoot-Hawley Tariff Act is the cause of the Depression and the stock market crash because then profits went down. The farmers couldn't sell because you added tariffs to everything. People couldn't afford, corn and wheat and everything. If you make the price too high, this is why I'm telling you about prices. The market controls them. So you can raise the price, but nobody's going to be home to buy it. This led to a banking crisis. 1931, unemployment 8 million. 1932, government doubled income tax, taking money out of the economy. The government caused the depression, tariffs, price fixing, farmers, high income tax, subsidies, all other taxes were raised, which is a bad idea. And we know who did that. FDR, with his man Keynes, caused the Great Depression. John C. Yeah, TK, awesome job. But thank you, John C. FDR devalue the dollar by 40% and seized gold holdings, started minimum wage, government spending at 10 billion, revenues were 3, same thing now. So revenue were 3 billion in 1930, was this 1932, 33, and we're spending 10 billion. How can you spend 10 if you only get 3 billion in, right? Doesn't make sense. NRA, National Recovery Administration, was terrible. Labor unions are bad news because they raise the rate, but the rate's got to be market. Anytime you get away from market, you're fucked. Uh, what do we know about the Great Crash from Reynolds? The 1920s were great, not bad. Stock crash due to government intervention and the Smoot-Hawley Tariff Act calling for increased tariffs on imports, monetary control, and the political business cycle was poor. Are we doing tariffs now? Yes. So you wonder when I say the stock market's going to crash, and it crashed because of the Tariff Act, and Trump is doing a Tariff Act. Is Trump trying to crash the stock market? Is he trying to crash the economy? Well, sure looks like it with tariffs. Well, we're going to get money. We're going to get $39 trillion in tariffs. No, you're not. People won't pay. It'll be too expensive. And we won't be able to get the goods in. Now, I disagree when they say we'll pay for the tariffs, not China and Russia and countries doing it. No, they pay. Does the market accept the pay increases? So if all of a sudden tomatoes, they tariff tomatoes, and now it's costing China, $5 to send them. Are we paying for it? Well, not if we don't pay the $5. That's why we see all these goods at the grocery store going up, but then we don't buy them, and then they're all 2 for 1. Oh, $2 a pop, 2 for $5, or whatever. You see the sales because people aren't paying. So I don't agree with we pay for it. I believe they pay for it, and then they hope that we buy at a higher price, which we don't. As I keep showing you, we only pay what we want to pay. We don't pay for extra. Let's see. Medium of exchange, what everybody wants is this. So this is money. Originally, cows were the medium of exchange. So originally, cows were money. Two values, exchange and use, right? Convenience developed by economics. It's more convenient to have this dollar than marbles or cows or tulips. And now it's more convenient to have a credit card, so you don't need to carry 1,000 of these. You just carry a credit card, and then that's credit, and then you have to pay it. So maybe that's what alligator means, is the credit card where you owe the bank, but in regular dollars, it's not credit, it's money. Qualities of the medium exchange, as we've talked, it's got to be portable. It's got to be scarce to keep a high value. Overabundance loses value, which again is what we talk about, printing the money to death. Divisible for small exchanges. Fungible, everything is the same, replaceable. Dollar bills, a $5 bill, a $10 bill are all replaceable. Acceptance, that's what kills Bitcoin. It must be accepted by all, and Bitcoin is not. And then it's got to be durable, which gold is, silver is, the dollar, the credit cards are. Value equals the most marketable commodity. So the dollar is not valuable right now. Money is the most marketable security. Market decides that money is marketable in value. Money functions, medium of exchange, work for money to buy food. How is this not money? Alistair McLeod sounds like an idiot. This is credit. This is money. I don't know what you're talking about in credit. Store of purchasing power, spend over time. Well, the purchasing power is going down, but ideally is a store of purchasing power. And a unit of account, measurement of account, common denominator, made or lost money. So, if you play poker and you start with 500, did it go to 1,000? You made money. If it goes to 0, you lost money. So again, this This is money. That is money. This is money. This is money. This is what it is. It is a medium of exchange. How can that not be a medium of exchange? Alistair, go fucking learn what you're talking about. Is this money? Theoretically, it is, but is this a medium of exchange? Can I buy food with it? And that's the big thing. I have to exchange this for money to buy food. So I can't use this to buy food, even though this is money. They don't accept this for money, except at my barbecue restaurant. I still have to sell it to get this. I can't use that. And that's the argument I have with the gals. They need money. And I said, I don't have money. I have gold and silver. I have a little bit of money, but I'm trying to hold on to it because I don't want to start selling my gold and silver for money if I have money. And that's the thing. So I have to sell it to get money, right? I can't hold it. I can't use it for money. So if I need, somebody's birthday, I'll send them $100. I can't send them gold and silver, and you certainly can't send it. I certainly can't mail it. So you have to sell it. I have to go to the store, sell it, take this, and then avoid the 28% capital gains tax because I don't make enough, and then go send. So I got to turn it into money, which is this. It's credit. What is Mark McGuire or no Alligator McCloud? Types of money, medium of exchange. Money, commodity money, cows and grains, two values equal use and exchange. Species, gold or silver, actual currency, gold coins. Deposit with the goldsmith, money substitute. God, goldsmith. Where's the goldsmith? Money substitute, a checkbook, two names on check, your name and the bank. A money certificate, 100% backed by gold or silver certificates. Fiduciary money, acceptance of truth, word of honor, based on a witness, checks, two ways, observation and faith, know something. Produced by banks, fiat, let there be light, fiat money produced by the government. That's all money. How he's getting this credit, I don't, what book is he reading? What he's talking about does not exist. He's off in Disneyland somewhere, La La Land. That is money. Okay, I just read you what money is. This is money. What the fuck is he talking about? Anyway, value of money, what money can purchase. The market talks in prices. So again, I talk value of money, what the money's worth, what it will buy. So the $100 bill now buys nothing. You go to the grocery store, it's $40, $50, put 10 items in your cart. That's the value of the money dropping. And the value of the gold goes up and down. And Alistair says, oh, well, the money's dropping and therefore the gold goes up. No, not at all. The money dropping is the money dropping. Gold going up is based on demand. Gold doesn't go up because the value of the dollar drops. Because you don't know how much, so if the dollar dropped, gold's at 5,000, gold just doesn't go to 6,000 because the money dropped. The money, in my mind, has dropped to zero. So it has no more to drop. How the hell is gold supposed to go up if the money's already worthless? Another hole in his thesis. All right, we talk inflation. Only the banking system can increase the money supply, which is the inflation. And then we got Say's law. What do people want? Why do people want money? It's a means to an end, so we can buy things. That's why we have money, to buy things. Now, we hold our gold and silver because it's going to be worth a lot more. It's not going to lose its value like the dollar, and it's going to go up, which is why we go into gold and silver. We can see that our stocks go up, or our bonds go up, or our real estate trusts go up, or our house or our car or our land go up But right now they're all going down because they're all based in dollars and the dollar is worthless. So as the dollar loses value, things in the dollar go down. That's my Bitcoin thing. It's $66,000, but the dollar's worthless. So the Bitcoin's worthless. And then people will say, well, but it'll be worth what a Bitcoin's worth. Well, a Bitcoin is not real. There's no such thing. You can't price things in Bitcoin. Bitcoin's not money, right? Bitcoin is not money. It is not the most what people want. I can't go into a store and people take Bitcoin. So in no way is it money. You have more with gold and silver, but I still can't use that now. I still am forced to use this for money, not for credit. And so therefore I still have to use that. So that's really the issue. To me, is to make you take money to buy goods, produce goods to service and services to get money means you go to work, supply to demand other people's things. So you're getting money at work and you then demand, I want eggs and cookies. Produce goods to get money to buy other goods. So I'm going to make TV sets and sell them, and then I'm going to make money, which is the whole idea of the economy. And that's why the stock market exists. So you could own stock in, Panasonic, and then they sell TVs and computers and phones, and you make money. Or Apple, you buy stock in Apple because they're going to make money selling phones and having Apple TV, even though nobody wants to pay for it. The whole ratings thing's bullshit and things like that. All right. Football. What's going on with football? We talk a lot about, you know, there was a Tom Brady thing I can show you. So we're all done with this tax rate, right? It's 28% if you're in the 20% bracket. If you don't make 50 grand, it's zero. And if you make 500 grand and under, it's 15%. So Tom Brady. So here's football.
This is cover one. In my second year, it's training camp. And we had a very good quarterback coach named Dick Rabine. And God rest his soul, unfortunately, he passed away in training camp and of a heart attack. And
I keep watching that one when I don't want to watch that one. This is the one.
You go into the NFL draft and everyone's like, look at this guy's skill set. He's really fast. He's really big. Look how strong an arm he throws. Oh my God, he was on his knees and he threw the ball 70 yards. But I'm like, okay, what does that mean? Is he smart enough to take in information, process it, and use it on the field? Has he mastered the playbook? Does he know how to study? Does he know how to learn from his mistakes? And then emotionally, is he competitive every day? Is he really volatile as a leader? Does he know how to deal with adversity? Does he know how to deal with competition? How does he react when things don't go his way? What's going to happen when he throws 4 interceptions a game? How's he going to respond to that? So if you don't have those, because as you guys know, when you play sports, adversity is coming. It may not be your first year. It may not be your second year. It will come at some point. And the best players I've ever been around, they know how to deal with all parts of those emotions.
Okay, so that's my concept of when you hear me say Lamar's not good and Caleb's not good. They don't understand the coverage and where they're going to throw the ball. Like I said, Josh Allen had a big arm, or Lamar's really fast. It doesn't make him a good quarterback. Can they read coverages and that? And that's where I excel in watching the quarterbacks, understanding that they can't read coverage. Because when Caleb goes back and he runs in circles, or CJ Stroud or Lamar or Jalen Hurts, when they go back to pass, they don't know where they're throwing the ball to. They're waiting for a receiver to get open, which is the NFL. You're not getting a lot of receivers open. So if they're waiting for that, they don't know what they're doing. They can't spot an open receiver. They should know it before the play. So in other words, when they go up to the line of scrimmage, they got to say, there's the strength of the defense, there's the weakness. Don't run plays into the strength, run plays into the weakness. And I'm going to throw, my guy's going to be open on a 10-yard out. That's the weakness. And then he goes back and he throws it there. 1, 2, 3, throw. He's not running around scrambling and all this. He basically knows where he's going. Once in a while, they might fool him and bring up somebody, but generally, he knows where he's throwing before he hikes the ball. Oh, they're going to blitz. I got to get rid of the ball. And that's the thing that they don't recognize. Drake May in the Super Bowl he took 6 sacks because he didn't know that I got to get rid of the ball. They're blitzing me. Or I can see them blitzing from the right side. I got to throw it. I got to have my tight end or running back go behind them, and I'm going to throw them the ball in about 2 seconds. That's how I beat the blitz, is going where they blitz me. But he didn't do it. And that's my point. So I understand the logic of the blitz and picking and reading the defense. And I can tell you who can do it and who can't. And it's very few that can. And that's why most of these quarterbacks suck. They're not being developed because the coaches all leave and come back every year. Their offensive coordinator is going and the defensive coordinator is going and the head coach is going. Then they draft a quarterback who is not developed in college because they don't have the skill to develop them. So you're not developing my guy in college. And then that leads me to, well, you're not developed. We'll develop them, we'll draft them and develop them. Coordinators come and go every year. Quarterback coach, they don't have. And then, they never develop. CJ Stroud has been in the league, 4 years? He'll never be developed. He's not getting the proper thing. So this is the problem. And that's what I read. And that's how I'm successful betting, is I read that the quarterback's running around in circles, CJ Stroud and Caleb and all these, and they're not developed. But then I see like Daniels and Bo Nix, and then I see Stafford and Mahomes and Joe Burrow, and I go, yeah, that's who I want to bet on. They're developed. They know where to throw the ball, and that's the key to betting, is to know who your quarterback is, how good he is. All right, here's one on Joe Montana versus Tom Brady by Lawrence Taylor.
I don't think Montana is better than Brady. And what makes Brady better? He had all the damn rules on his side. Look, Joe had one of the roughest career paths in football history.
This is Lawrence Taylor.
Late round pick, starts as a backup, takes a 2-14 Niners team and flips the whole damn franchise. Then right in the middle of his prime, the locker room blows up and he still pushes through and wins again. And that injury, it was 90 against us. If he doesn't get knocked out in that NFC championship game, he's going to his 5th Super Bowl. And let's be honest, he's probably winning that one too. Now imagine Joe Montana with Brady's rules. Imagine him in a league where a hit like the one we put on him turns into a 15-yard flag and a fine in the mail. He'd carve up defenses even easier. He'd played 5, 6 more league years. And those rings everybody talks about, Joe wouldn't just match Brady. He might leave him in the dust. And here's the truth. You put Montana in Brady's era with Brady's rules, with Brady's safety net. You're not asking if he's better. You're asking who the hell is finishing second. You think love is about...
And there you go. Lawrence Taylor telling you how good Joe Montana was and the different eras. So when you argue who's the best quarterback, by far, it's Joe Montana. All right, let's go to Mark McGwire.
Emphasize again, it is free to join.
And I'm only going to show you a few minutes.
The techniques and strategies. The markets are
So I just watched it, and I wrote down the times. So at the 8-minute mark.
What's happening is that people are getting out of paper into physical. And I mean, when you got, say, 100 times paper, if you have physical or no physical, where do you go? And this is why you've got problems in the market. And they've only just begun, in my view. I think it's going to continue because unless the Chinese relent, and I don't think they are, bear in mind that they're now on the warpath. They turned around and told their own institutions yesterday or day before, don't buy US treasuries, reduce your positions. Get out of crypto. We're banning it completely. Anyone who deals in crypto is going to jail, sort of thing. So they're clearing text, in my view. This is classic, absolute classic. So we're into a financial war, and the beneficiaries of this are going to be commodities as a whole, led by gold and silver. And I think that broadly is roughly where we are, Andy.
So what he's saying is get out of paper because it's worthless, because they're inflating it, not debasing it, because the more you print, they lose value and it doesn't buy as much. So you get out of the dollar and you Rumpelstiltskin it and buy gold and silver because it's limited. You can't print it, so the value will not drop because, as you know, the more there is, the less the value. And gold and silver you can't print. And there's enough demand for what they have. So there's 200,000 tons of gold. There's enough demand to say, yeah, there it is. And with silver, there's 500,000 tons, but it's used in an industry and people like us buying it to get out of dollars. So there's more demand for silver and the price is cheaper. So yeah, we want to buy gold. For us, it's harder because now it's getting to 5,100. Then it's going to go to 8,000, and it's going to be harder to buy an ounce with 8,000. This is what I'm warning everybody, and I've been warning you since 2021, that you better buy it now while it's still available and still cheap. And I've warned you that. And if I have to, I'll go into my old videos and say, look, because that was the whole premise. There was a guy in Alabama, and he had a house and had, and I said, get out of your stocks and buy gold and silver because there's not going to be available and it's going to be a hell of a lot more expensive. And he didn't listen to me. And now we're going to watch the stocks go down. He's going to go, geez, I wish I would have listened to Howard. Back then, gold was 2,000 an ounce. Now, at 50, it's going to cost you 5,300. My guy's 200 over. So anyway, so you have that. All right, let's go to minute 14. All right. So these are just key comments. So I watched it again to see what I'm missing, and I realized that Alistair is really clueless. Mark McGuire's okay, but Alistair just doesn't get it. He doesn't understand it. He hears the word inflation, but he can't even understand what inflation is. And he wants to call it debasement. And they think inflation is the value of the dollar going down. Debasement is taking the gold and silver out of the coins. How they confuse this blows my mind. And then you tell them and they still ignore it and say, well, it's debate. They're debasing the currency. And you're like, what the fuck are you talking about? All right.
I wouldn't like to be in that position of having a position in a very volatile market, not being able to deal for a week. I mean, my goodness, I think that's negligent or stupid, really. So anyway, he's got himself into this position. It's going to be interesting to see how it comes out. But I mean, the point is, I think the main point is, and this is something that this guy obviously, doesn't really understand. What's driving silver is people are getting out of paper into physical. And when you have got, 1,000 tons of paper and only 1 ton of physical, you got a problem. So
all a Ponzi
the last
scheme.
one to do it is the sissy, and this squeeze is only just starting. And it's not just silver, but I mean, if you look at all the metals, they are wildly undervalued, measured in gold. Now, you could argue, well, that's because gold has risen, and they haven't. But over the long term, the purchasing power of gold remains relatively constant. And I've worked on a basket of base metals, which is assembled by the IMF, and taking that as, if you like, the basis, I can see that the value of that basket is at only 20% of that long-term value. Only 20%. In other words, that gap has got to close. Now, some of it could be gold going down a little bit, but in current circumstances, I think that would be a very brave call. What it does mean, and this is desperately important, it means that even in gold, these things like copper, silver, molybdenum, all these sort of, nickel, lead, whatever, a basket of them is going to go up 4 to 5 times in gold, while gold is rising against fiat currencies, which in turn means that the input, if you like, into producer prices is going to be dramatic in 2026 and even more dramatic perhaps in 2027. And it's not just restricted to, to a basket of metals. I mean, the whole of the commodity complex has been suppressed by the shenanigans, if you like.
See, we know all that. They've suppressed it. They've suppressed gold and silver. But again, he just contradicted himself. He said, well, maybe gold, what did he say? Something like gold is might go down or something. Well, wait, you said the dollar is going down, making gold going up. So what are we to assume that the dollar is going up? That's impossible. Once you start printing $150 trillion, the value of the dollar is zero. It cannot go back to 1 or 2 or 3 because you've printed it to zero. The only escape for the dollar is to back it by gold and or silver. Then the dollar would have value. You would just come out with a new dollar. This USD number 2 is backed by gold. And that's how you get out of this whole thing. But they're not smart enough to do it because they're all a bunch of idiots who are in charge. They're Keynesians that are just clueless. They're like Jim Rickards. Oh, you can print as much as you want. Yeah, you got idiots like that, and that's the collapse. So again, he's talking out of like he's not really sure. All right. Well, we'll just keep going. I got 17 to 21, so about 5 minutes.
Go on in paper currencies, and particularly the dollar. That's being unwound. And I mean, energy price is exactly the same thing. I mean, I can easily see oil shooting up, doubling, tripling. I mean, I'm not forecasting that, but the dynamics behind it are precisely that. And it's going to be very surprising if inflation, that stupid phrase, which actually is loss of purchasing power of the currency, the fiat currency, it would be very surprising if that doesn't return in Spain later on this.
Okay. First of all, it's inflation is money printing, causing the value to drop. And then he says it wouldn't be surprising if it comes back. It didn't go anywhere. It's still here. He still thinks it's prices. This is the problem with this guy. He doesn't understand it. He thinks inflation is prices. He doesn't get it's forget the fiat or not fiat. It's the money. It's being printed. It's losing value. And what does he mean? Come back. Where has it gone? Oh, it's 3%. No, it's the market saying, well, you can't charge me $10 for tuna fish. I'm not going to buy it. He doesn't get how the market works. So you see, I can pick all this up and just shoot him down because he doesn't get it. The inflation can come back. It didn't go anywhere. The inflation is still thousands of percent. It didn't move, but you don't measure it year over year. You measure it since 1971. So I don't know it just shows you, see what he's doing is saying how stupid he is. He's saying he's an idiot because he doesn't understand the concepts. And I'm smart enough to understand the concepts to say you're wrong. See, you want to get to my level where you know what's going on and you don't have to listen to Alligator to explain it to you to go, oh, yeah, Alligator said that the inflation's coming back. No, you're at my level. You go, no, it hasn't gone anywhere. It can't go anywhere. It's still there. And it's, we're all fucked. I mean, that's, but it's not necessarily prices because Toyota tried pushing up the Camry to 35. Nobody would buy it. He lowered it to 26. You cannot just raise prices to raise prices. If people don't buy it, you can't raise prices. Inflation is money printing, lowering the value of the dollar, as I explained to you. All right.
Yeah. And does anybody expect it? No. They're talking about, we'll get another cut in interest rates from the Fed. Isn't it wonderful? Come on. I mean, the markets are broken. They are completely mispricing everything. Markets always get it right in the
Markets they're not wrong. The markets are correct. You cannot charge $50 for a New York strip. You can't. Nobody will buy it. So the markets are definitely correct. This is what people will buy it for. The ribs, I got to charge $30. The market's correct. If you charge 40, nobody's going to buy it. The Toyota at $35,000, nobody's going to buy it. Steak, New York strip at $20, nobody's going to buy it. We don't need New York strip at any price. There's a price. That's it. Most of these goods and services, we will think it's a fair trade at this price. Tuna at $4 for the big can, okay. At $10, I'm not buying it. My dark chocolate, $6 for Lindt and the other brands, your Aldi, I'm not paying $6 for it. No. So I bought the $4 dark chocolate. So again, it's in the market. You can't just set any price. The markets are correct. They always are correct because people want a fair trade. And even though we know the fair trade is probably $20 for a dark chocolate because the dollar isn't worth anything, we still, I don't want to pay more than $4 for it. So again, he's not understanding it.
Yeah. So, you may think, well, Mr. Market says this today, and therefore that's reliable. It will change. Markets will wake up, and then they'll be held to pay. And that's really why, if you look at, if you want a reason why gold is maybe front running the dollar in terms of the dollar losing its purchasing power, that's the signal we're getting.
Do you know, it's so interesting. I think you say, well, how come everyone doesn't understand this? How come these intelligent market makers, hedge fund managers, you think, well, who have so little exposure to gold? And what was interesting this morning pretty much said it all. You probably watch Bloomberg, and I think at 8 o'clock in the morning, I was watching, Mark Cudmore, I think his name is. And he said, I'm very grumpy this morning. He said, because I just don't understand the markets anymore. I don't understand. Now, this is their expert. And he said, and the other guy comes in and says, yeah, all the traders that we speak to are feeling the same as you. And you think, hang on a minute. I mean, so because they're saying things like, well, we see the correlations are broken. No, we see gold going up with the S&Ps. Well, probably because people are trying to hedge their position. But when the market goes down, the risk markets go down, gold doesn't come down with it. And it's so they just don't understand it. And so because for years and years, the money honeys come on. They know exactly what to talk about when it comes to stocks and what's moving stocks and interest rates and one thing or another. But when it comes to gold, they look vacant. They just, and silver, even more vacant. So it's interesting that suddenly we've got an interest coming through from the mainstream is waking up, and they're saying, well, we're too late almost, because really gold and silver are no longer being priced this side of them, as you've rightly put. They're not being priced here anymore. They're being priced in physical markets that have escaped the spring fed. Yeah,
absolutely. I mean, I think the answer to this conundrum, there's several reasons for it. The first is that everybody accounts in dollars or their own currency or whatever, so that when you trade, that's where you book your profits in the currency, and your bonuses are paid on that basis as well. So the idea that actually it's the currency going down rather than, let's say, a basket of commodities rising is alien to traders anyway. And of course, because it's alien to traders, it's also alien to most investment managers, and it's alien to their clients. And bear in mind that, for the last 53, 54 years, 55 years now, people have bought the Kool-Aid from the US Treasury that gold is no longer part of the monetary system. The dollar is the monetary system, and everything is tied to that. I've even had Austrian economists who should know better saying the dollar is money. No, it is not. It is credit. In other words, so there is disinformation. And indeed,
the dollar is not money. I'm an Austrian economist, and I'm telling you, the dollar is money. And I'm an Austrian economist. I don't know what the fuck he's talking about. It's credit. It's money. By the definition of money I gave you, it is money. Also, yes, it is foreign that the dollar loses value because the dollar's not tracked. There's no, the dollar's worth this so much today and it's worth this. There is no, it says a 20 on it, it's worth $20. It doesn't say what the 20 is worth, but it's not worth as much. And they're foreign, they think gold's going up. Gold is going up, as I stated earlier. And again, Mark McGwire just doesn't get it, or Alligator just doesn't get it. It is, the dollar going down is correct, but gold is not necessarily correlated. The dollar drops $10, gold goes up $10. That's not how it works. Gold's in its own market. And once we get out of this paper market and into a physical market, gold will go through the roof and the dollar will not be going down $100 and gold goes up $100. He's out of his mind with that. But yes, us Austrian economists know that the dollar is money. What do you mean it's credit? It is money. That's what it is, a medium of exchange. That's what money is. So it frustrates me to hear him talk like this. He talks like an idiot. Anyway.
There is disinformation. And indeed, going back to Keynes's general theory, he invented macroeconomics in that book, literally on page 16, page 20, something like that. He said basically about Say's law that, if it is wrong, then there's a whole new, I think his words were something like, there's a whole new chapter of economics to be written. That was the basis of macroeconomics. It was all based on a lie. And the idea that statistics can actually tell you anything about the future completely ignores the human element. These guys just don't understand economics. They're not economists. They're mathematicians. And
so again, what he just said was they're mathematicians. So they look at the stats and then carry them forward. Where what we do, us Austrians, is the people are the ones, and you can't lock them in. There was Adam Smith when they were on a chessboard and you're trying to lock them in. You can't. People do what they want. People, they want to go get Chinese today. You can't estimate that. It's what they do. But they might get barbecue today. They might get hamburgers today. You don't know what they're going to do. That's why you can't forecast it. And that's why, like in football, and I say you can't formulate it. You don't know. And it's the same thing here. So with people, you really don't know what they're going to do. You got to let them do it. That's Austrian economics, is letting the people in charge, not the government, try to fix things and price things. Based on, that's why price controls don't work. That's why the whole idea of the government trying to set prices and try to calculate the market is impossible, because we don't know I don't know what I'm doing for dinner. I might have Chinese, I might have barbecue, I might get a hamburger. I don't know, but you can't just lock it in. Actually, I'm going to have a hamburger with, I have a little bit of a rib left and I got a hamburger I'm going to put in my omelet. And it's so tasty in the omelet, but that's what I'm eating for dinner. But that's the point. You really, the government can't be the one predicting it. That's communism, that's socialism, that's fascism. When the government dictates this is going to be the price controls, and this is what you're going to do, and we're only going to make black cars because that's, you don't have an option of buying green or red or yellow. And that's the problem with it. So a little bit more of this.
If they're anything, they're mathematicians. So it's hardly surprising that when the system starts falling apart, they're bereft of ideas and they don't understand what the hell's going on. And I think that's basically what you've been describing.
Yeah, and I think again it leads into what they do is they take gold and silver and say, oh, well, let's look at the moving averages, shall we? So if it's above the 200, it must come back there. And what they're forgetting is that from as we've been saying, that when these long-term moving averages they've been populated, they're anchored in history, in a history where the markets were determined in the West, and they're no longer anchored in the West. So therefore, when you just mindlessly say, well, we've got to pull back because it's above a moving average, they're just not getting the fact that you're dealing with apples and oranges.
No, that's absolutely right.
Yeah, then that's the point. That's why you start seeing some of the drops in COMEX, because it's not done by the market. It's done by these guys looking at the moving averages, but this isn't a stock. Gold and silver are money, not stocks. So what might work in Microsoft or Apple, oh no, the moving average doesn't work in stocks at all. Plus the average is all over the place because of bricks, but it's moving because of inflation, which they don't understand, and the dollar losing value, which they don't understand. They can't comprehend that. They can't comprehend you printed too much and it has no value. And this is the downfall of the U.S. and the West and the BRICS or not the BRICS, the U.S. and the Euro, the Europeans and the Brits and the Canadians and the Australians. They are all clueless. Holding, well, our dollar is going to be where the U.S. dollar. How can it collapse? Well, it collapses because you print too much of it. And that's what's happening. So again, these technical people looking at it, and as I say, you can't use technical analysis here, are looking at it and go, it's above this 200-day moving average, it's going to come down, and then it keeps going up because people are dumping it to get into it and the demand to get in. And once we get a physical market, they'll never be able to figure out it's going to 10, 20,000 in gold, and silver will go to $1,000 an ounce. They won't get it, because you got to get out of the dollars, but they can't figure out getting out of the dollars. This is what we're dealing with, a bunch of fucking idiots.
The idea that you can treat commodities, particularly as a group, in the same way as you treat, let's say, investment in tech stocks, is completely fallacious. And the number of, as you rightly point out, the number of mechanical technical analysts, who've said that silver is overbought or something. Overbought, basically, if they go back and read the books, basically what they're talking about is a situation where there is undue speculation. But where are the speculators? In silver, we've got open interest on COMEX about as low as it gets. As you rightly point out, $5 spreads basically means we're not dealing. We don't want to know. There is no market. The speculators are not there. There may be some in China, and we sort of think, okay, this has been rising and rising and rising, and so Chinese love a punt, so they will have gone in there and they were bought it. So, okay, we can shake out a few guys over there. But it turns out they've gone and shorted it. It's absolutely unreal. These are not markets that you can analyze, if you like, in the way in which you would analyze, if you like, an investment. Because gold and silver are not investments. They're money. They're real money. Or commodities. But it's not an investment. And this is where the big mistake is being made. And to try and by coming up with sort of handy things from ETFs to derivatives and all the rest of it is actually getting the whole thing arse about face.
And people forget. It's in your face every day. Gold and silver traded as foreign exchange cross against the dollar, against other fiat currencies. So it's not just a commodity, it's money. And it's money being weighed up against those crosses. And I think people forget that. And it's none of the analysts seem to focus on, it is actually money. And it's right in your face that it's money.
I think the other thing, Andy, is that nobody actually understands the legal position. The legal position is that gold and silver, or a similar metal, throughout history has always been final settlement. where you don't have final settlement without a counterparty on the other side, it is credit. And so what we are seeing is we are seeing the value of credit changing relative to final settlement. Now, no surprises which way it is changing. It is changing downwards, just the same as every fiat currency in the past has. And every fiat currency in the past has finally disappeared. Now,
and so will this. All right. Well, I guess I want to get to 26, so I got another 20 seconds, and then I get to my last one. That's the thing. They don't realize it's money. They don't know what it is. They haven't been taught in it, and they're taught in stocks and bonds and real estate trust. And so they look at a 50-day moving average because that's how they analyze stocks and bonds and real estate trust. And then you got these ETFs trying to say, oh, gold's ETF. Oh, but you don't get physical. It's in paper. Well, as the paper goes to zero, so does the ETF, which is why I tell you, do not be in ETFs. Well, I have 50 ounces of gold in ETF. You'll never get the gold because it's not real. It's a Ponzi scheme. So you avoid the ETFs. You avoid the paper. That's why I yell at people who are in stocks. Get the fuck out of stocks because it's in paper. Don't buy Bitcoin because it's not backed by anything. As I read you, every currency that's not backed by gold goes to zero or silver. So what do you think Bitcoin? Oh, it's money. Do you even understand what money is? It's a medium of exchange. Do you get paid in Bitcoin? Do you buy at the grocery store with Bitcoin? No. Then how the fuck can it be money? So you're dreaming around, well, I'm going to get rich with Bitcoin because that's your goal is to get rich. But you don't understand how you're getting rich. And you don't understand what Bitcoin is. And you think, I'm going to get rich in Bitcoin because it's up to 120,000. And look, it's just going to keep going. It's at 65,000 now. Now what are you going to do? Is it going to go back to 120 or down to zero? Probably down very close to zero because people are realizing it's not real. Trump did not do this Bitcoin thing like he told you he was going to do. So he went to something else. Even these 100-year bonds backed by gold is a joke because who's going to buy 100? I'm not going to be around in 100 years. Why would I want a bond? Why would I want to buy a bond, a 100-year bond backed by gold? How about if I just buy gold and silver instead of being in a 100-year bond? Right. So it's a lot of lack of knowledge, which is where I go with the knowledge. You have to understand it. You can't just listen to it without understanding it and then just going along with it. That's the mistake. Well, Alistair said it's not money, it's credit. Oh, well, I'm going to listen to that. He's out of his fucking mind. The dollar is money. It's a medium of exchange used to buy and sell goods and services. I can sell things and get money, but that's the only option I have. I can't. Maybe if you want to give me gold, I'll take it, or silver. I won't take Bitcoin, but I will take. If you want to give me silver for my football picks, I'll be happy to take that. So anyway, that's kind of what it is. But let's wrap it up here. I got the 26 million, the 26-minute mark, and we're just about there. So let's hear the last thought that I thought was important for class.
This is actually what we're now facing. And the reason we're here is because of insurmountable, unproductive debt, mainly in the hands of governments, which require continued growth, if you like. But what is growth? Growth is growth in credit. So the whole thing is actually founded on a basis which is bound to collapse. And that is actually what we're seeing. And so, the idea, going back to what you were saying about overbought, oversold, and moving averages and all the rest of it, the idea that you can, successfully chart this actually is quite limited. I mean, there are some people who are very, very good at this, and I wouldn't decry their work.
Thank you.
But really, this story is about the dollar going to zero unless someone steps in and stops it. And who's that going to be? Who's going to go against the world?
You can't stop it. Again, he doesn't know what he's talking about. Nobody can step in and stop it. The only thing you can possibly do is come out with currency number 2 backed by gold and silver. But you can't stop the dollar going to zero. There's nothing you can do to stop it. It's already been printed and it's already worthless. So the thought of stopping it is not there. The only option is USD number 2, and we got these little, it's backed by gold and silver, and that would be it. That's your option. There is no somebody stepping in.
Who's going to go against the public demand, the electorate demand to really, I mean, you know, they're less interested in protecting the dollar because, you know, they don't understand what's actually happening. They think prices are rising rather than the dollar going down. So any cuts in welfare, in Medicare, in you know, government spending just cannot be tolerated. You don't buy votes that way. You buy votes by spending more. And that's what the politicians do. And they will collapse it just the same as Helfferich, who was the economy minister in early 1920s Germany, did with the Reichsmark. And the amazing thing about it was that his understanding of economics, I mean, he was one of the top economists at the time, and he presided over the collapse of the Reichsmark. And furthermore, he was the architect of what replaced it. I mean, can you believe it? But today, this group of politicians have not even a fraction of the understanding of economics that Helfrich had. And yet he presided over the collapse of the currency. So what hope have we got? I mean, the answer basically is that gold and silver go to infinity. I mean, or as good as, unless someone wakes up and gets the mandate, and this is the important thing, gets the mandate to deal with it. But nobody's going to get the mandate. It's always a question of crisis first, solution second. And as the history of Germany showed, the solution basically, it was absolutely fine. I mean, it's, you know, the collapse of the currency's purchasing power stopped due in large part to Helfrich's plans and also Helmut Schacht, who then took over the central banking function. You know, they managed to get confidence back into the currency. But this led to Hitler.
Yes.
It's all in Hayek's road to serfdom. You know, there comes a point in this process afterwards that people demand a strong leader. We want a strong leader.
All right, people did not demand Hitler. He was not elected. He shot all the other people. There was that night of fires, and then the chancellor died, and then Hitler took over. He was never elected, and they never wanted him. He wasn't a strong leader. He was a crazy man, but he had the backing of Ford and Mercedes and Bosch. Some of these German companies created him. And then all he did, he was bankrupt, was to go steal, as I said, go steal the gold and silver from Czechoslovakia and the Poland central banks and all these other countries' central banks is what he did, Romania and Hungary. So that's why it ended up in the New York Fed and be stolen by diehard number 3 when the Germans stole their gold back. But they didn't demand Hitler. Hitler was not elected. He had a very small percentage. He was not an elected leader. They did not like Hitler, but Hitler had the backing of the army. And basically, if you didn't say Heil, you went to jail. So you're saying Heil. I mean, that's how simple it was. Now we got to do it with Trump, right? We don't. This guy's out of his mind. He keeps having wars because we're broke and he's trying to steal. He's going off the Hitler plan. We're going to steal gold and silver and oil from these Venezuela and Iran and Iraq and Ukraine and whoever else has oil. We're going to have a war with them. That's why I'm surprised China. Well, they got 80,000 tons of gold and silver, so he wants to invade China to get their thing. Problem is we don't have an army. We gave all our equipment to the Ukrainians. We can't build it. It takes years to build the missiles and the planes and the trains and the automobiles and everything else, which we don't have, and it'll take years till we get it. So that's it for Mark McGuire. I had minute 26. So basically, what is inflation? As I said, it's money printing. It's always money printing. And so that's what you have. You have you have all this massive inflation, which we know. That's why our only out's gold and silver. So we're 5 steps ahead. We know that's the thing. We've been saying it. I've been saying it since 2021, as I showed you my first receipt. I bought for 1975. If you do sell your gold and silver, just sell an ounce or two. You won't get 1099. You don't have to worry about capital gains. If you happen to sell a lot and get a 1099, the capital gains does not look like it's 28% unless you're married over 630,000, single over 545,000. So if just a regular guy makes 100,000, you're paying 15% if you do a capital gains. Which again, without the 1099, I don't know why you would do a capital gains. And I don't know why you'd sell more than a couple ounces of gold. You do not want to get back into this. So you're only doing it is to pay for a trip, pay for a medical expense or some expense that you're going to get the money and pay right away with it. Because the longer you hold this, the lower the value it is. So you don't want to sell 2 ounces and get $100,000 for it. And then what do you do with the 100,000? Put it in the bank? You're fucked. Put it in your safe. It's still losing value. So this just assume it has zero value. Yeah, we can use it at the grocery store and the restaurants. They'll still take it, but it doesn't mean it has value. And it doesn't go down the exact amount gold goes up. So it's not gold going up. It's the dollar going down. Is just a bunch of bullshit. It is not really correlated. You have 2 separate things. You're printing the money, making it go to zero. The value, then people running in and buying gold and the price going up. They're not correlated. As the dollar goes down, it's not like this where gold goes up, the dollar goes down, and then gold, due to demand from bricks, goes up. I don't know what he's talking about. It's not the dollar going down. It's not gold going up. It's the dollar going down. He's out of his fucking mind. It is gold going up based on bricks and the demand. Same with silver. It's the demand pushing the price up. The fact the dollar's going down pushes people into buying the gold and silver because you can't stay in the dollar. But it's not the dollar went down 100, gold went up 100. No, he's out of his mind. Yes, it takes more dollars to buy the gold. However, it doesn't mean to get to the 5,100 is based on demand, not based on the dollar dropped 5,100. And now that's why gold's 5,100. No, he doesn't get it. And so that's all you can do. We'll keep saying it's not gold going up. It is the gold going up because the prices of everything is all fucked up now, right? So a steak's $20. Well, before silver was $20 an ounce. 1 ounce would buy a steak. Now silver's $85. Now you can get 4 steaks with it. How is it equal? It just doesn't make sense. He kind of gets the concept. It takes more dollars to buy the ounce of gold, but at the value of the ounce of gold is where he's all fucked up. Anyway, so football, anything, we got these new coaches. All it does is fuck up our look, our trend analysis. So we do the trend analysis, see how teams play in a teaser. And as you have all these, now you got Buffalo fucked up because now you got Harbaugh. Baltimore fucked up because now you got JC Mertz or whatever. And as these coaches come over, the teams are fucked up because you have no background. You don't have last year to say these are the trends. Okay, so now we got a year of Johnson and Caleb. We still have Dan Campbell, but that's changed because we don't have Ben Johnson there. So now we got a year of some offensive coordinator. We got fired after 3 games. So the coach doesn't know how to hire offensive coordinator. This is the second one he's fired, and the defense sucks. So now is Detroit going to be an over team with the new offensive coordinator who sucked at Arizona? I don't think so. So we've got to get, so basically it's extremely difficult to go more than a year on most teams in the NFL. Kansas City, yes. We got Mahomes, we got Reed. Only in those places. So we got a year with Drake Bay and Vrabel. We've got a couple years in Green Bay. We've got a couple years in Houston. Miami's gone. San Diego, we can use, but we got a new offensive coordinator. Seattle, we can use. The Rams, we can use. And so in the first 4 or 5 weeks, that's the teams I'm using. KC, the Rams, even Chicago, I got a year I can kind of use. And then as I get 4 or 5 weeks into it, then I can start using the current year. So when somebody tells me I lost money because of your pick, where was he the remaining 8 weeks when I went to the moon? I probably hit 80% the last 8, 9, 10 weeks. Where was the guy? The guy bails. You got to play me the whole year. You can't look. It's like anything. You can't look at gold in a day and go, oh, it's going down, I'm not going to buy it. Or my picks. You can't look at my picks in a day. You got to look at the whole year. And we won like $90,000. And you can't look at just like you can't look at poker or gold and silver. I don't know. You can't look at it in a day. You got to give it time. You got to give it a full set of database. So with me, give me 5, 6 weeks and then come back and say this or that. And I advise you early on, we'll go with KC and we'll go with Cincinnati with Joe Burrow and we'll go with Mahomes. We're going to go with those teams, the Rams, Seattle. But later on, then we got to see Philadelphia's new offensive coordinator, and we've got to see the Giants with Harbaugh. We got to wait 5 or 6 weeks because he's not a good offensive coordinator. Wasn't a really good offensive coach. He was a pretty good defensive coach, but he's a special teams coach. So we've got to, Denver, yes, we got Bo Nix and Sean Payton for 2 years, and Sean McVay and Shanahan. We kind of have an idea. Frisco needs a lot of help at the receiver end. And their defense, they had a lot of injuries. So you keep all that in set. In college, it's really hard with the NIL. Look at Indiana. They have Mendoza for a year and they win the title. And then they got Josh Hoover from I think it's TCU. I think they got the TCU quarterback. So he should be pretty good. So it shouldn't really hurt them. Again, it's a nice style Indiana uses. They run the ball. They play good defense. That will stay, right? He'll recruit guys that can play the defense. And pretty much you can probably roll over players on your defense. And then running, you should have a running back for a couple of years. It's the quarterback that he keeps bringing on for a year and teaching the system. I wouldn't draft any of the Indiana quarterbacks because they don't know they're not learning the system. I mean, they're learning it in the short run, but you can't really. It's like short running poker or short running gold. You really got to know it in depth. It's got to be a few years. It can't be 1 year. I know people have been listening to me for a long time, and now they're probably starting to get the idea of poker or gold or football. Although when I hear people like Buffett who really don't understand my picking yet, and I know he's listened to me. He always wants free picks, but he's been listening to me. And then he goes and bets New England, and you're like, you how many years have you listened to me, and you still don't get it? Okay, so that's all you can do. Is you can't. Everything blends together, right? You can't really trend analysis gold and silver because of bricks, because new variables came in. And you can't do football. You got to be very careful with the new variables. You can't just sit there and make a formula and then try to use it. It's not going to work. Anyway, I think that's about it. I'll go to the pool for the hot tub and I'll go ride the bike, but to try to use the lap pool, I mean, unless they open it at 2:00 when the tournament ends. I love calling it a tournament, not a swim meet. Just like I call gold and silver a collectible, not that term. Let me make my own terms up. I don't need you to tell me I'm a stacker. And that's it. Daria, I haven't heard from because there's trouble with Telegram and internet in Russia with the war. They don't want to leave the internet on, so they can intercept messages. I guess the Brits, the MI6 and the CIA listen in. So sometimes they shut off the internet. So that's all. It is Daria's birthday in 3 days. On Wednesday, it's her birthday. So I did send her a birthday gift, and then she can go do what she wants with it. And that's it. So we're getting to the end of February, and in May, I plan on moving to a quiet place, thank God. And it's so frustrating, and it's so tough on my blood pressure when these people above are so loud and they play their TV so loud, and you're like, dudes, this is an apartment. You can't do that. And they don't care. Nobody's going to tell me how to live. Okay, fine. Well, go fuck yourself. Go do it somewhere else. And so I'm moving out, and can't move out quick enough. Anyway, it's hard life when you, like, even at the pool, I can't use my lane. I get pissed. Like, what the fuck? There's nobody in the pool. The tournament's over. Why can't we then open the pool up? It really makes no sense. You know what it's like? It's like there's a traffic accident and they're blocking the lane, and then they finish the accident, they open the lane up, right? And then you can go. Or there's a party at a restaurant and the party's over, and then they open up the full restaurant. So that's what I don't understand about the pool. I'm using those explanations. Just open it up. Why? There's no reason not to open up the lap pool if there's nobody, if the tournament's over for the day. Open it up. It's there. You don't have to do anything. Just open it up. Well, we have to set up what? To set it up. So open it up for a few hours and set it up at 6:00. Have somebody come in and do whatever for a half hour to set it up, or just say, no kids allowed. Just have adults do their swimming or something like that. But it's just ridiculous. So it's frustrating. So I'm just going to ride the bike and hot tub. I'm not going to try to swim. If they do open it, great. If they don't, I'm not going to. I'll go in tomorrow. Maybe I'll do do it twice. But outside of that, that's what's going on here. We got snow. It was 50 degrees most of the week. I look out the window today. It's snowing. It's been snowed. So there's snow on the ground. Very cold winter so far, except for this week. It did get warm. That's about it. My birthday's coming up in March. I'm excited. I'll probably go buy more silver. Maybe I'll go play poker on my birthday. I like doing that because it's got to be a lucky day for you, right? So what I tend to do is I'll play poker. I'll take my 300, play poker, and whatever I get at the end, I will then go buy silver with it. Although I used to be able to buy 10, 15 ounces. Now I'll buy 3 ounces instead of the 10 or 15. But, that's a good time to buy is on your birthday. But again, I use my card. And what some of the girls don't understand is they need cash. And I go, I don't have cash, but I can use my card. So when I go on a vacation with the girls, then I'm using my card for the hotel and for the foods, and I'm not using a lot of cash. And I don't think they understand that. Now, I do have to pay back the cards, but I don't need the cash. And so now I got to be careful with cash, because if I use too much, then I got to go cash in a coin to get more cash, which I don't want to do. So I'm kind of being like, I got to protect my money and not go switch to gold and silver. So I'd rather give you an ounce of silver than give you $100. Anyway, that's what's going on. So the football is over. We'll get the draft in a month or two. The Olympics, haven't watched 2 seconds of it. I have no interest. I think I'm just so tired of all the commercials and even football. It's getting very difficult to watch. Oh, we have to go for a review. Well, we'll come back in 5 minutes after showing commercials. Oh, the guy's hurt. We'll come back in 5 minutes as the guy's hurt. And, there's a touchdown. Wait, we got a review. Did he get both feet in? And the commentators are, well, wait, it looked like, why, did he get both feet down? I don't know. The ball was juggling. And, it's like they take all the excitement out of the game. You scored a touchdown, you want to be happy. And I'm watching these old football games from the 70s and 80s. And I was watching like the the catch game against Dallas. And it's a touchdown, right? It's Dwight Clark touchdown. That's it. There's no review. Some guy made a catch. I think Tony Hill caught a touchdown, and it was close. Did he get both feet in? And it almost looks like the second foot didn't get in, but since they called it a touchdown, it was a touchdown, and it was instant. Yeah, it's a touchdown. That's it. They can't take it away, and there you go. And now let's look at a 10-minute review and have 10 minutes of commercials to see if you got both feet in, so they can call New York going, wait, who bet on the game? Do we need it to be a touchdown or not? And the whole thing's fixed and very hard to watch. And we don't really. So it's getting very difficult to watch sports. I don't watch basketball. I'm not interested. Baseball, I can't find. I mean, they don't have the Tigers on Channel 4 or 7 or anything. It's on whatever pay service. And they think we're going to just pay for all these services. They're out of their minds. I don't need to. I can go on YouTube and watch what happened. Basketball, I can't watch. Hockey, I have no interest. And that leaves baseball a little bit. But again, it's not on TV. And so it's football, which is where we're at, which is what we tend to watch. So after football, you guys are asking me. I do the NBA playoffs, but by a psychological view, and some baseball, we go through it, but it's more looking at ERA. So I will go through that once baseball starts in April. And that's about it. So go enjoy your Sunday. Do a little swimming and work out. Was there anything else I had? Not really. Egon a little bit. The sphere we talked about. I can hear Benny upstairs, guys. It's the loudest I've never been in an apartment. I hear the people talking upstairs. I've been watching like the high stakes poker is out now on YouTube. So I've been watching that. That's why I've been talking about poker. I'll talk about it tomorrow, but basically the strategies, the better players will bet a lot to protect their hands. So they got aces and now 3 spades, 2 spades hit, and then the third spade hits the turn, and then they're putting in $100,000 to protect their hands. So they understand protecting the hands a little bit more. They don't sit there and check and hope to trap on the river, because that's the stupidest thing you can do, because I either hit my hand on the river. If I didn't hit it, I'm not paying you off. So the bet's got to be on the turn. Anyway, we'll get more into that tomorrow. I'm going to watch some of that. But, seeing the pros play, but it's a cash game. And watching these tournaments, it's a big difference, because in the tournaments, they're not really doing any of that. All right, let me eat. Let me go to to ride the bike and take a hot tub. I don't think I can do the pool. Too many kids, too noisy, and it's a bunch of 3-foot sections, which it's very hard to to run actually hurts your back running it. So, and it's hard to see the pool being open but not being used. And I like how, well, they're paying for it. And I kind of said, I'm paying for it too. I'm a customer. I pay you every month for it. And I said to the girl, you wouldn't be working if I didn't pay. So I'm paying also to use it, and you're not allowing me because of you have a tournament, and you're saying they paid like I didn't pay. So I don't know. I don't really get it. It's a city run rec center, and they rent it out for these high school teams, and it's like, why doesn't the high school just do it at their fucking high school? So I don't get it. But you can't inconvenience your customers. I always refer to a restaurant. So I'm the barbecue place. Oh, we're having a birthday party, so you can't come in. The party's over. Yeah, but we're cleaning up. You can't come in. It's very stupid. Anyway, that's about it. Odessa and this whole war is over, but not finished. The Russians have basically won, and I hate when it says Odessa in danger or Trump's strategy for reviving the empire or all this. It just doesn't make sense because it says, oh, Odessa's gone. Zelensky is done. But then you listen to the video and it's got nothing, he hasn't surrendered. So what the fuck is the title for? So anyway, we'll keep an eye on that kind of stuff. But basically Russia's won, but the U.S., I don't know what they're doing with Russia. They don't like Russia. They don't want to end the war, even though 2 million people have died. They don't care about that. We want their oil and their gold and, and the silver. And you're like, what the fuck? Anyway, have a good day. www.teaserking.com. You can look at my history of the picks I made and the general, what is a teaser I put up there, and then the homepage. Positive comments from people as well as my email. So if you need that. Anyway, have a wonderful Sunday. Talk to you tomorrow. www.teaserking.com. Thank you very much.